evening. I would like to thank Kwabena Doncor. Thank you, Kwabena Doncor, for actually looking at the video and quickly removing your comment. They said, freaking yeah. And I was like, up there. I was going in to comment back. I don't know if y'all can make that out, but it says, comment not found. That means they quickly removed the comment. Because when I looked, I said, up, somebody either trying to be funny or can't follow rules. Can't follow instructions. And when I clicked on it, it said, comment could not be found. Thank you for not ruining it for those who really wanted to participate in this live. Alicia Brown, you should be in the live right now. T. Lewis, you should be in the live right now. Stop coming. Oh, I say 22 minutes ago. Y'all did that a long time ago. I don't know why it just popped in on my phone. Good evening, good evening, good evening, good evening. I'm not going to be in front of you long tonight. I'm not going to be in front of. I thought this right here was so funny. Right? Somebody. It's a picture. Y'all probably can't see it. Let me see if I can share it. I don't have my MacBook. I got to put it in Dropbox. If I had my MacBook, I could just airdrop it to myself. But I'm on my PC. I'm going to share this and then we going to get started. Man, people be sending me the most random stuff. They either send it to me or it come across my timeline. Either send it to me or it come across my timeline. It says, Doctor, sir, it's ma'am. Well, ma'am, you have testicular cancer. Yo, let's get it to let's see who in the chat. What's up here to learn the show? What's up, Tradable, Father Legends, Deborah, Kill. You saw that too? Yeah, they got rid of it. What's up, FC? I was like, what's up, Tradition? Killer Kev. Is that Kev or is that a different Kev? Dude, last night's video was eye-opening. I appreciate your commitment. I hope you help people become gazillionaires. I'm your newest fan. As long as you know that my wife is my biggest fan. Tim, will you point out the breaker for today's action, please? Yes, I will. KC. Oh, I got to look at that in a minute. Welcome, Killer Kill. What's up, Avery? What's going on? And we glad you're here, Kev. And we glad you're here. We're glad you're here, new guy. Father of Legends, I salute you with both hands. Let's get into it, man. I'm not going to be before you long. I'm a little hungry. I was sitting there waiting on Junior, and I said, hey, let me ask the people if they want to run it back. So, before we get started, I said that already, but let's say it together. I'm put it on the screen. I'm put it on the screen. I'm gonna say we're gonna say this together. The most importante thing to remember when you're Why is that on there twice? Bias. Okay, hold on. Don't deviate. Bias. Why is that on there twice? Um. Uh, Hold up. I'm trying to find the thing. It's on there twice. Okay. All right, let me put it on the screen so everybody can see it. Let's say it together. All in together now. All in together now. The most importante thing to everything is to remember time, price, bias, draw. We're going to start with the time and price is the most important part, right? Time, price, bias, draw. Y'all ready? Say it with me. Time, price, bias, draw. Say it again. Time, price, bias, draw. Right? What's time about? Only trading ICT concepts during verified times that the algorithms are most active. ICT calls them kill zones. I ain't gonna get into all that. Go learn that. Price. Everything is about the open, high, low, and close. The open, high, low, and close of candles, the open, high, low, and close of sessions, the open, high, low, and close of days, the open, high, low, and close of weeks, the open, high, low, and close of months. Everything is about the open, high, low, and close. Yes, they all melt together. The open, high, low, and close of candles interact with the open, high, low, and close of the session. The open, high, low, and close of the session interacts with the open, high, low, and close of the day. The open, high, low, and close of the day interacts with the open, high, low, and close of the week. The open, high, low, and close of the week interact with the open, high, low, and close of the month. It all melts together. Everything is about the open, high, low, and close. You want to be selling in a premium and buying in a discount, right? You want to be selling in a premium and buying in a discount. You never want to sell in a discount. You never want to buy in a premium. Well, Tim, sometimes it look like you're buying in a premium because you're not understanding that we may be sitting on top of a balanced price range, and I'm trading for a smaller price leg. I'm not trading the entire price leg. With the bottom of the price leg is balanced, and now I'm only focusing on the top of the price leg. So I'm buying in the discount of the top piece, right? You always want to buy in a discount. You always want to sell in the premium, right? Bias is price bullish or bearish. As simple as that. Is price hinting that it wants to move bullish? Is it hinting that it wants to move bearish? It don't matter which way price is moving overall, right? Because you can trade against the grain. But if you're trading against the grain, you got to remember that the probability of you getting an extended move is going to be limited. It's not going to be highly probable to get us. The bigger and better moves are going to come when you're going with the higher time frame bias, right? Your weekly bias, your daily bias. But the higher the time frame with everything, the higher the time frame, the longer it takes to play out, the less setups you see, right? You're looking for your overall arching bias. You want to get that from the weekly and the daily. The weekly bias right? The weekly bias, it may, like any other bias, it may change, but it's going to take you longer to realize that the weekly bias has changed because it's a weekly bias and you got 5 trading days in the week. And by the time price move and hit a target and show you that it's ready to reverse and change, it might be Thursday, it might be Friday. And you started out Sunday night being bullish, and now here you come on Friday, and then you had a midweek reversal, and now you're bearish. But it's going to take you a long amount of time. So your weekly bias is not going to change very frequently. Your daily bias may not change very frequently, but your intraday bias, especially now in the market that we're trading in right now, the intraday bias at 9 o'clock, 9:30, you might be bullish. 9:45, you might be bearish. 10:15, you might be bullish. 11:30, you might be bearish. On a just a trend day to the upside, your daily bias probably won't never change. Seek and destroy, if you choose to trade that day, seek and destroy. When you just run stops, run stops, run stops, run stops, run stops, constantly switching your bias. But you have to be nimble. You got to be nimble. You have to really understand these concepts to be able to do that. Right? Draw. What's the draw? Where is price trying to get to? Right? Can somebody put in the chat for me, what is price always seeking? What is price always seeking? It's 2 right answers. You can tell me both, or you can tell me one. Both answers will get you full credit. But what? The live over, man. The live over. I'm sick of it. I'm sick of it. The live over, man. The live over. Hey, baby. How was your day? I'm gonna go holler at my sweetie, man. Sick of it. Sick of it. Very good. Liquidity. Very good. Liquidity, very good. Inefficiency, very good. Liquidity and imbalance is very good. Very good. Very good. Michelle Tucker. Inefficiency, very good. Very good. Price is always seeking liquidity and balance, right? Price wants to be in a state of balance. That's why price goes up and goes down, right? It's servicing everybody, right? It Bye, Felicia. Get off my live. Y'all know my block game strong. Y'all know my block game strong. Hey, that's why I go up and down, right? It's going up, you know what I'm saying? Servicing the buy sides, coming down, offering buy side, offering sell side, offering buy side, offering sell side. It's constantly seeking balance, right? And it's constantly reaching for liquidity, right? Draw. That's your draw. Where is liquidity? Right? Above highs and below lows, right? Imbalances, where are the inefficiencies? They're found in imbalances, voids, or full gaps, fair value gaps, volume imbalances. Somewhere, if you see a wick, the lower time frame, there's some kind of imbalance probably in there. When you got a long wick, it's probably an imbalance in there on the lower time frame. So it's constantly seeking balance, right? Throw something in that I didn't throw in last night, right? Looking at, that's it. Let's say it one more time before we go, right? Come here, get on the right screen. Time, price, bias, draw. One more time. Time, price, bias, draw. Keep saying that to yourself all day long. All day, every day. Just keep saying that to yourself all day, every day. Right? So let's look at something real quick before we get into it. Right? I went to daily. Don't really want to go to a daily. I'll just stay on the hourly, right? I'll stay on the hourly, right? So let's experimentate. Let's experimentate. Right? There's an hourly candle right there. Right? We're just gonna randomly pick this candle and test my theory. Right? Got us a wick. Got us a wick right there. There's a wick. Right? Now let's go down to uno momento. We're gonna step it down. Let's go to 15-minute first. In that shaded area right there. Right? Goes to the 15. Boom. Straight to the 15-minute. There's two imbalances right there. Sibby and a Bissy. I just randomly picked an hourly candle. Right? So if you see long wicks, there's a good chance on the Lord. 90% chance, I'm willing to say. Don't quote me on the percentage. I'm just making this up. It's going to be an imbalance on the lower time frame. Right? That's one of the reasons why when you see price go into an imbalance or go into a wick, you know what I'm saying? Depending on if you're not all the way down on the 1 minute, right? And it just overshoots just a little bit, 9 times out of 10, if it's just not just giving it a little mohawk, if it's just reaching past it a little bit further than you thought it should, it's probably something on the lower time frame that is seeking an imbalance that you're just not looking at on the higher time frame, right? So always, that's why I like to, once I pick my entry, I like to drop down to the 1 minute to see what risk is lying underneath. How many imbalances are on the 1 minute? I'm looking at a 5 minute fair value gap, 5 minute breaker. How many imbalances is on the 1 minute? I like to go down and see how much risk do I got. If I take it at institutional order flow entry drill, how many 1 minute fair value gaps are inside there that it may reach down to get to? So I know if my stop will protect me. Can I absorb that heat? Right? Can I absorb that heat? If I wanted to enter, on this fair value gap right here, right? If I want to enter on that fair value gap right there, that's a 15-minute fair value gap. Boom. Drop all the way down to the 1 minute to see if I'm have to absorb any heat if I take that on an institutional order flow entry drill. Where's that? What time was that? I probably should have made it a bright color. I probably should have made it a bright color. I'm trying to undo. No, okay. Is that my niece? How are you? Never too busy for you, my love. I'm never too busy for you. I said I'm never too busy for you. Oh, green. Where you go? I'm up on the side right here. Okay. Hey. Hello, how are you? Not good. I heard you talking. You done lost a whole lot of weight. What you been? I look the same size. You ain't the same size? Yes, I am. I went to the doctor, they told me. You I've been in and out the doctor too, they told me. Oh, that's good. That means you've been eating right and exercising. Yep, I weigh 130. Okay, then you ain't ashamed of your weight. That's what I'm talking about. Nope. When you let's see if you be the same way when you get to 160 when you about 40. 160. When you get 40 and 160. What's that on your leg? 333.
Grandma Angel number.
Grandma Angel number.
Yeah.
Ain't you your daddy mama?
No.
Who was
Grandma.
Angel?
Our grandma.
Oh, what you mean Angel number? What?
You know how like when they see you like 111.
Yeah.
I looked hers up and it was 333.
Oh,
And that was
okay.
the number I was kind of seeing at the same time, so I just got it because I feel like she was looking at me.
Okay then. All right then. Let me get back to my live now.
Okay. See
I
you
like
later.
your Crocs. Sorry about that, y'all. Family first. Now, what day is this? Oh, yeah, May 10th should be on there. All right, May 10th should be on there. There it is. Man, I'm like, man, this thing is whooping my tail. Okay. All right. So, and just like that. And just like that, again, I just randomly picked this, right? And look at God. Look at God. Look at God. How he bringing it together, right? Remember, we highlighted a 15-minute imbalance, right? Got the 15-minute imbalance there, right? But when you look inside it, like coming down to this 15-minute imbalance here, when you look here, right? So you got a 1 minute imbalance right here, right? As you see, we got an institutional order flow entry drill right there on that 1 minute imbalance right there, right? Coming down into this order block, came into the open of the order block, 1 minute institutional order flow entry drill, right? And then we got another 1 minute, another 1 minute there. And then at the bottom, there's another 1 minute here inside that we got down into that's still not filled right here. That we come down to the top of that, came to the high of this breaker right here, right? We came to the high of the breaker, right? And if you notice, we got came up, came down, came up, came down right there. There's your breaker. If you come over here, this right here would technically be a mitigation block because this low did not break that low. So this would be a mitigation block, and then a breaker. Price came down and kissed that right on the high. I mean, when I told y'all how it's powerful when you got a break and a mitigation block together with a fair value gap, right? But I'm getting distracted. But I look inside here. So if I'm coming back down and I want to enter in on that, if just say if price was coming back down, like how it went up and it, we coming back, just say we coming down here, like this price is coming down and I want to enter on this right here. So now I know I got one fair value gap there, right? I got one Bissy here that wasn't filled, got another Bissy there, got another Bissy there, and I got a Bissy down here right next to a breaker, right? And then below that, the only thing I have is a volume imbalance right down there. So that's I go in and look for what risk on the lower time frame presents itself when price is coming back down or coming up to my entry PD array. I trade with I trade imbalances and breakers. That's what I trade. Imbalances and breakers together. I don't trade breakers by themselves. I will trade a fair value gap without a breaker. I will trade a fair value gap with just a mitigation block. But like I said, my research of my notes, research of my journals lets me know that the breaker and fair value gap combination is more successful, has a higher rate of success for me. This morning or sometime today, I shared this photography right here with the Discord. No, not that photo. That's me. Um, Shout out to iPhone, man. I don't know if it's the new phones or the new software, but done of the day of me like struggling to make thumbnails. And I ain't gonna say struggling, but taking a long time to make thumbnails. Because now, only thing I do now is I take a selfie. Right, we're gonna get back to the video. Right, I take a selfie like this. Right, I take a selfie like this right here, and as you can see, it's green. Y'all can't see it because it's keyed out. Right, it's green. Right, and then if I press on it, did y'all see how it glowed? You see how it glowed just then when I pressed on it, and then now it says share. When I hit share, then it just sends me cut out of that picture already, and all I got to do is just drop it into Photoshop like this. Is already cut out. I don't have to key it out or nothing like that. So just wanted to share that with y'all. That ain't got nothing to do with the price of tea in China, but I shared this right here in the Discord right earlier today, and when I shared it, I said, ain't got no money, baby. I'm broke, baby. I said price needs to blast through 41.96.25 to continue higher to 40.26.25 buy side liquidity. If 41.96.25 rejects price with force and we break 41.84.25, I'm looking for a short entry. Right. And this is the picture that I attached with that right there. All right. So now let's break this down. Look here. I think I still got that line on there. I just got the letters, head, text. Yes, there it is. Okay. I hit the letters so they ain't just sitting all on my screen like that while I'm trying to watch the price move, right? So let's blow this up. These hourly candles right here, right? This is the buy side at 40.26.25, right? If you're wondering where that buy side comes from, right? It's a high from May the 1st at 12 p.m. Right? It's a 12 p.m. high from May the 1st, right? The SIBI that's marked out on there, that is a SIBI that was marked out from May the 1st at 2 p.m. Right now, this little SIBI inside there, I just marked that out today during price action. Right during price action, I marked this SIBI out. Right, this is a 5-minute SIBI. It's on the lower time frame. It's somewhere after 11 a.m. Right, because this is the 11 o'clock hourly candle that is anchored to. So it's sometime after 11 a.m. I get the exact time when we drop lower, if we drop lower. Right. So now, this SIBI right here. Now let's explain. We're here now. We ain't really in teach mode right now. We gonna try to make it interactive, but we taking a deep dive inside the mind of little Timmy Rogers right now. Right. All right, inside the mind of little Timmy Rogers. So we practical use case right now. That's all we doing. Right. So price, let's find 930. All right, it's going to be in here. So let's go down to 15-minute candle so we can actually find 930. Right. So 930 right here. All right. So here we go. So 930. That's 930 right there. We open, right? Price open up, right? Look at where we are when we open up, right? Look at where we are when we open up, right? What has occurred? What has occurred when the market opened up at 9:30? 9:30, right? What time is 9:30? 9:30 is the New York Open, right? Remember, everything is based off time and price. Time and price, right? When do you want to be making entries? During the kill zones. Now, me personally, now, me personally, now, me personally, I choose not to be in a trade going into 9:30. I try to lean toward not taking a trade until at least after 9:45, because a lot of times when the market open, prices in seek and destroy, prices hitting you with a Judas swing, prices not giving me my setup the way my setup is required, is not giving me my setup. So those are the three reasons why I choose not to trade right at 9:30. But sometimes I can see my setup, but since my rule is I don't trade right at 9:30, I will not take it, right? So let's go. Yes, we're on 15-minute candles. That'll work out good. If you notice right here, we have, let me come in here. Let me come in here. This is some stuff I put on there later. Probably don't need that for what we're doing. Yeah, I don't need that for what we're doing. There's some stuff I put on there later. That's a little buy side I put on there for afternoon trade. I was looking at, or took, should I say. Okay, the rest of it I'll leave. Okay, so breaker 19. All right, that's the high. Sell side. High. That one. Okay. So 1, 2, 3. All right. 1, 2, 3. Break a high. Medium. All right. So I think that's it. Midnight open. Yeah. Okay. So now, if you notice, right, I have breaker. I don't know if y'all can make that out. I don't know if the font is big enough. Break it, make it big, so make sure y'all can see the font. All right. I don't know if y'all can see that font, but right, it says bullish breaker high, 15-minute, mean threshold breaker, bullish breaker 5-minute, and it says bullish breaker low, 15-minute. Right? What is that stemming to? That's stemming to this breaker over here. Don't worry, it's all squanched up. That ain't important right now, right? So I got a 15-minute breaker right there, right? And then when you drop down to the lower time frame, there's a 5-minute breaker right in this area here, right? So the high of the 15-minute breaker and the high of the 5-minute breaker, if I'm not mistaken, are the same. The low of the 15-minute breaker is much lower. So I marked out the high of the 15-minute breaker, the low of the 15-minute breaker, and the mean threshold of the 5-minute breaker, because the 5-minute breaker is up at the top of the fit. So instead of having a bunch of squares on there, I just marked out the key levels that I wanted to pay attention to for that breaker. Right now, let's zoom back out to just before 9:30, and I'm gonna do this while I'm gonna do this right here, so that if I need to move stuff off, and like bring it back. I know what it is. I know what it is. What's up? Now, if you look over here, right, this breaker here is actually highlighted, right? This is a 1 hour breaker, right? We have a 1 hour bullish breaker right there, right? So look what we did, right? Right? We came over here. This right here is we got a 1 hour. No, that's not my breaker. Come over here. Come over here. Oh, look. That's my thing got moved some kind of way. Oh, I'm looking at the wrong time frame. I'm like, wait a minute. It's supposed to be a breaker over there. Make sure I got my stuff together. Make sure I got my stuff together. Here we go. Make sure I got my stuff together. We didn't actually take that low out. We did actually take that low out. So I marked that incorrectly. So I marked that incorrectly. Ah, that's my daughter. That's my daughter. Hold on. Y'all hold on for a second. That's my daughter. Wait a minute. Hola, ¿qué pasa? Sorry about that. That was my daughter calling me. Um, we no, that's I'm tripping. Yeah, that is my breaker right there. All right. I kept saying bullish breaker, but it's a bearish breaker. Cause I'm looking, I'm like, what? I'm like, what in the world? But it's a bearish breaker. All right. Okay. So we got a bearish breaker right here. Right. We went up, came down. We made that bearish breaker right there. Right. As we was coming at 8:30. Boom. We came down. We made that bearish breaker right there. And then as we came down and made that bearish breaker, right? Once we opened up at 9 o'clock, right? Once we came down, made this bearish breaker right here, I was not, I was anticipating this bearish breaker to just be a speed bump, right? I kept saying bullish breaker. So I'm looking at the green candles. I'm like, wait a minute, that's not right. But I'm on track now. That's why I label stuff. So if I confuse myself. So now the 1 hour bearish breaker is right here, right? So what happened at 8:30? Let me get the other stuff off the screen so I can paint the picture for you and what goes through the mind of little Timmy Rogers, right? Move you up here. Now, 8:30, right? Price looking mad naked, right? You're looking at it like, what in the world is going on? What in the world is going on, right? So, hold up. Hold on, rude boy. Hold on, rude boy. Hold on, rude boy. Let's back up. Come now, selector. Come now, selector. Rewind. 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 Now we rewound. Right. So this is yesterday, May 17th. This candle right here, where the little finger is moving on it, May 17th, right? So on May 17th, right, we opened up there, right? We came down to there, right? Did not take out that sell side, right? We took out that buy side, right, on May 17th. And then we closed right here, right? So based off what we discussed last night, what is my bias going into this morning? Somebody put it in the chat for me. Based off, okay, right? So yesterday's, we're gonna pretend we can't pretend right now, but just act like y'all can't see this right here. Yesterday's candles here, based off what we said last night, what we discussed last night, right? What is my bias going into today's price action? We opened here, did not take out the sell side, took out the buy side, and we closed here. What is my bias going into today? Bullish. With that busy, my breaker also. Focus, killer. Liquid means rewind. Gunshot means forward. Rewind. Rewind. Proceed, selector. More fire. Bullish. Thank you, killer. Nobody else put it in the chat. Okay, so now we got the bias. The bias is bullish. Why is the bias bullish? Because yesterday we took out liquidity and we took it out with aggression and did not reject. We did not get a rejection. ICT call it distribution, expansion. I call it pow! Just with some authority. We took out buy side liquidity with authority, and we did not reject. Took out the daily liquidity, did not reject. Now, when you take out liquidity and do not reject, you look If you take out buy side liquidity and do not reject, you look above price and to the left, everything you own is in a box to the left for your next draw on liquidity, right? So looking at the price, can somebody put in the chat, would the draw on liquidity be May the 10th high or May the 1st high? May the 10th high or May the 1st high? Ignore the fact that you can see the candles now. Based off yesterday's candle, right? Right? Remember where we closed. Remember where we closed. Based off where we closed, right? Would the draw be May the 10th high or May the 1st high? All right. It probably would have been better for me to just get a raise. Put a ray. May the 10th high or May the 1st high. Very good. May the 1st, because we already took May the 10th. Very good. Very good. May the 1st, because we already took May the 10th. So now, this is the draw. We know the bias. We know the bias. And we know the draw. Going into the day. Right? We know the bias and we know the draw. Going into the day. Okay, now. Proceed, selector. All right, now let's proceed. All right, so now 1 hour chart, no, 15, was on 15-minute charts. Was on 15-minute charts, right? So now, let me get my magnet over here. I'm gonna put this over here where we can see. Change this to green. Buy side liquidity. All right. Draw right there. Did I delete my 9? There you go. Okay. Okay, so oh, that's the prior date. I'm like, what is all this crap on my screen? Okay, so I guess I can leave that there. Ain't gonna hurt nothing. Right. So the draw's here, right? That's the draw. That's where we are anticipating price to go. That's the draw, right? We're anticipating price to go there, right? Where's my... Oh, there it is right there. I'm looking all over the place for this. Right? And why are we looking for price to go there? Right? I need one more line. I'm sorry. Just so you can get a good view of what it looked like on... Oh, there it is right there. I already got it. I don't need one more line. I'm all over the place today. This is why I'm all over the place. Okay. Now, everything is marked correctly. Now, Looking at it on 15-minute candles. 15 candles. I'm gonna make this big so y'all can see it, right? So 15-minute candles, right? This is yesterday's price action, right? This yesterday's price action. This is like when we opened up in the evening, right? So this is the buy side liquidity from Tuesday, right? Tuesday buy side liquidity. You see this right here? If that ain't a pow, I don't know what it is. You can call it expansion. You can call it displacement. I keep saying distribution. Displacement. I'm sorry. That's the word I was looking for. Displacement. I apologize again for saying distribution, right? Ja fake. I'm not ja faking. You feel me? You should be offended for going to Ely High. So back to what I was saying. Stop. I said I wasn't gonna be on here long. It's 51 minutes. You interrupted me, man. So we got heavy distribution, displacement to the upside yesterday, right? This is the buy side liquidity right there at 41.51, right? Price never looked back. So this right here says I'm reaching, I'm looking, I'm expanding toward liquidity up here somewhere. So when we looked up and to the left, this was our next daily draw right over there. All right, squanch it up, right there. That was our next daily draw, right? When we came up, blew past that daily draw, we went past all of this right here, right? We went past all of this right here, and we closed right up there near the high. So that was our next draw. We looked up and to the left, right? Now that we've looked up and to the left, as we see, we come over here, right? We dilly-dallying all night, right? We got consolidation right here. All of this consolidation right here. What is resting up under this consolidation right here, right? Stops for people who went long down here, right? People who went long down here, right? We've consolidated here all this time, had this monster move up. So somebody has moved their stops right up here because they see this as support. So now, in order to get to our draw, right? What does price have to do? We got to go back to the highs and get what? Our bus fare. What is our bus fare? Liquidity. The algorithm is going to go get liquidity. So if you are bullish, you are expecting price to raid sell stops before making its move. Let me say it again. If you are bullish, you are looking for price to raid sell stops before making its move. Let me say it again. If you are bullish, Tim, why do you keep repeating this? Because I'm glad somebody finally asked that question. Because if we look, remember how I started this all out? I started this out pointing out what? A breaker, right? I started this out pointing out a breaker, right? Remember when I said I choose not to get into a trade right at 9:30. I choose not because it's a lot of times you get hit with a Judas swing. Point number one, it can be crazy volatile and unpredictable. Point number two, right? point number 3. See point number 1 and 2. I don't know. Now, but let me say it again. If you are bullish, you want price to raid sales stops prior to it making its move. That does not mean scramble to try to get long right here. That is just merely one piece of the puzzle. One piece of the puzzle. Let's say it again. If you are bullish, you want to see a raid on sales stops before the price initiates its move, right? So I pointed out this breaker right down here, right? And so that's why when we came down and made this breaker, I was anticipating this breaker to be a speed bump because I saw that price had been sitting on top of this bullish breaker all night, soaking up liquidity up under this consolidation, right? Looking right tasty and juicy for what? The New York kill zone. I like to start around 8:30, around here. This is where I like to start. If I ain't mistaken, I think ICT start as early as 7:30. 7:30 maybe for Forex, maybe. I think 8:30 is more so toward equities, but I like to wait until after 8:30 because 8:30 is typically the manipulating news events, right? So right in the kill zone, let's just highlight. We're gonna highlight 8:30 because that's what I use. If it ain't right, let me think what I think. And we're gonna take it over here to, we're gonna put 11:30 right there, right? 11:30, right? Now you are looking for it to set up in the kill zone. One thing you got to remember, your entry can fall after the kill zone. It doesn't have to fall in the kill zone. It can form after the kill zone, right? But you want the entry model to set up in the kill zone, right? So as we come into the 8:30 kill zone, what does price do? Right? Price raids sales stops right here, right? I'm fun to draw. Make sure I get in this. I'm fun to draw. If you do not like it when I draw, please exit now because I'm fun to draw. I'm fun to wow. I'm fun to wow y'all with my artistic ability. I'm about to wow y'all with my artistic ability. Ooh. Be prepared to be wowed. Get prepared to be wowed. Oh, I still got them pictures on there from last night. Okay. All right. So we already said resting up under here. This is a big liquidity pool of sell side liquidity, right? We got a big liquidity pool of sell side liquidity, right? So as we dip down into that sell side liquidity, what do we meet up with? right? We meet up with the breaker. Remember our friend breaker, right? This is the high of the 15-minute, right? That top line right there, the top green line. This blue line here, that's the mean threshold of the 5-minute. And this red line down here, right close to the sell side liquidity. The buy side liquidity that we took out on the 16th, that we took out yesterday, the buy side liquidity from the 16th, but we took it out yesterday. That's the low of the 15-minute breaker, right? Price rated sell stops. This is a rate on sale stops, right? Came to the mean threshold of the breaker. There's the Mohawk. The Mohawk poked anybody that was waiting right there at the mean threshold. They got picked up. The algo made sure to pick up anybody that was sitting there. Y'all know how a lot of times when it come down and touch my price and never pick me up, and I show y'all the videos of look at this. Look at how it's not picking me up, because it'll come down. The Mohawk is what ensures you to get picked up. You see this Mohawk over here on this down close counter that stopped at the high of that breaker. That Mohawk ensured that whoever was waiting at that price got picked up. Ensured whoever was waiting at that price got picked up. And then when the next candle, look what it, no Mohawk at all. No Mohawk at all. Up, nonstop. And it blew through this bearish breaker like 90 going north. 90 going north, right? This right here. Don't be fooled. Don't be fooled and don't get discouraged because you feel like you missed it. You feel like you missed it. Don't get discouraged. Don't get discouraged, because if you are bullish, y'all say it with me. If you are bullish, you want price to make a run on sell side, right? Prior to initiating the move. Oh, I don't like that. Get off my screen. Prior to initiating the move, right? This run on sell side, and then that pow, that's the initiation of the move, right? That is the initiation of the move. Don't get discouraged. Don't be like, oh, it's running off and leaving me. Jethro, get the mule. Price leaving me. We got to chase it, Jethro. No, you don't. Okay. Right? It's all inside Kill Bill. Right? So we got our run on sell side. Right? Right? I pointed this out because we have a breaker and we have a fair value gap, right? That is my entry model, right? A breaking market structure, right? A creation of a breaker, right? Back to a fair value gap, right? Creation of a breaker, breaking market structure, creation of a breaker, back to a fair value gap. That's my model, right? Right? Had the breaking market structure that created the breaker, traded back down into a fair value gap. That's my entry model. But that's not what I'm trading right now. What I'm trading right now is something to give me a run on the draw. Right? I need something to give me a run on the draw. Right? This breaker, this breaker, this fair value gap, and that drop down into that fair value gap, that's not my trade, right? That's the initiation. This drop down into the sell side is the initiation of my trade. This right here is I'm on red alert. I'm on red alert. I'm on red alert. I'm on red alert. Right? Why am I on red alert? Why am I on red alert? Let me tell you why I'm on red alert. Right? I'm on red alert because we had a run on sell stops. Right? And then we came back up. Got a breaking market structure. Right? Right? We got a breaking market structure. We had a run on sell stops. We had a break. We had a run on sell stops. We had a breaking market structure with heavy displacement, or as we like to say, pow. Right? Had a nice pow, huge pow. Right? So now, what was left in the wake of this move? Right? We got an imbalance here. We got an imbalance here. Right? Right. So we got an imbalance there and an imbalance there. Right. Let's go back over here for a second. I can't see nothing up close, bro. Where's my folder? SAT. Oh, there it is. I can't see nothing. Now, there you go. Now, we got an imbalance here and an imbalance there, right? What do? Get our handy dandy Fibonacci's. Lock. Get our handy dandy Fibonacci's. Right? Handy dandy Fibonacci's. Now, if you are bullish, you want to see a raid of sell stops. You want to see distribution. You want to see, for my model, you want to see imbalances left in the discount for price to draw back to. It's high. It's more. The success rate, if it's combined with a breaker, is heightened. Right? The success rate, if combined with a breaker, is heightened. If it's not combined with a breaker, it can still work. But if it's combined with a breaker, it's more successful. Right? So now, looking at what we got going on here, right? We have this 15-minute breaker here, up there, that lines up with the top imbalance, right? But where is the top imbalance? Right? Where's the top imbalance? The top imbalance is in the premium, right? We have another imbalance right down here. And if we stretch this out if we stretch this out and we look right here, right? We have us. That right there, that imbalance lines up with a mitigation block on the 15-minute, right? Mitigation block on the 15-minute. Remember I said the success rate when it's with a breaker is higher, but it can also line up with a mitigation block, right? Now, we can also go lower to see if we're offered, because I always, when I'm looking at the time frame that I'm looking at for the imbalance, and these are 5 minutes, so we need to be on the 5-minute anyway, right? When I'm looking at the 5-minute, right? On the 5-minute, right here, on the 5-minute, right there, we can come here, right? We got a breaker there, and we got a breaker here, right? We got two different breakers there, one down there low and one right there, right? That lines up with the 5-minute, what's the name, right? We got one there, one there. Then if we come over here, come over, you can come over. We have, you can come over. If I get it to move like I want it to move, right? Nah. And I was highlighting that so wrong. Let me come back and do that over. Right. So there you go, right there. Right. Come back and do that all over. Right. Come back and do that all over. When we came back here, we had our breaker right there that we said. All right. Then we come over here. We had our mitigation block right there. Got our mitigation block there on the 5-minute. So we got a breaker, mitigation block, combo on the 5-minute, right? Then we got the imbalance here. But all this right here was set up inside the kill zone, right? And then now we're over here in the afternoon time, right? 1:30. Push this over here. Push that over there to 3 o'clock, right? 1:30 to 3 o'clock, right? So now price comes back down, boop, hits our imbalance there, right? Hits our imbalance there that we had there, right there next to our mitigation block when we had the high that did not come down and break a low, went up, right? Combined with a breaker back over here on this side, right? Back into that imbalance, right? Then we took off, gone, right? Heading toward where? Our draw, right? Heading toward our draw, right there. Now, let's break down what happens, right? Let's break down what happens if you miss this entry like me, because I don't start looking at the afternoon session until 2 o'clock, right? I don't start looking at the afternoon session until 2 o'clock, right? So you got the afternoon session 2 o'clock, and then we got the last hour, right? From 3 until, this is how I break it down. I break it down like this for the last hour, right? Like the afternoon session that I'm looking at, and then the last hour. Because a lot of times, depending on how price going, I'll take a trade in that last hour. But sometimes once 3 o'clock hit, I'll be like, nah, I'm done. Today was one of them days where I took it. That's why I'm breaking down what you do if you miss this right here, right? It's not all is not lost if you missed your first entry, if you still haven't hit the draw, and price is still giving you opportunities. Let's proceed. Right? So now I missed this entry right here. Right? I missed this entry right here. Now, as we came up, I ain't gonna hold you, right? As we came up above this high right there, right? As we came up above this high right here, I just tried to take a random entry, right? Just try to take a random entry, and it didn't bode well for me. I took a full stop out. So I backed up, I regrouped, and I said, Tim, let's see what price offers you. Now, what did price offer? If we look here, we came down, right? Price, we came down. Oh, this ain't, I'm trying to draw and it ain't even, I got to let me kind of squanch this up a little bit. Let me try to mark this out. See, let me try to mark some stuff out and then see what 1 minute candles look like. Mark that out. Oh, wait a minute. Let's see what we got on there already. Here you go. Now let me see what 1 minute candles look like. If it's going to be too small. Okay, hopefully this ain't too little. Hopefully this ain't too little. All right. So let's take a screenshot of this. And remember, we're on what do we do if we missed this entry here? That was the entry based off of the New York morning kill zone, right? That was the entry, right? So as price comes up, right? As price comes up, mind you, I've taken my full stop out over here, right? Somewhere over here. I've taken my full stop out somewhere over here. Now, taking my full stop over there, stop out over there now, right? So we're over here. We took out this buy side right here, right? And we started to consolidate right in this area here, right? We started to consolidate in this area right here, right? Once we started to consolidate in that area right there, pay attention with me. Pay attention. These are 1 minute candles now, right? Came up, right? Notice down here. Notice down here as we made the entry there, we came up, dilly-dadded a little bit, then we took off, right? We took off. Pow! Then we started consolidating right there, right? Started consolidating right there. Now that we started consolidating here, now let's look and see what price has done, right? We offered sell side, consolidated, offered buy side, right? Started consolidating right there, right? Sell side, buy side, started consolidating right there, right? But looky, what happened right here, right? What happened right there? This right, what happened right there, right? What does this move right here tell us? And somebody put it in the chat. The shift in the shift in the middle is what I look for to go long. That's my confirmation. Thank you for sharing. Yeah, yes, it is a pie gal, but based off of we offered sell side, consolidated, then offered buy side, then consolidated again. What did that move right there tell us about offering sell side, consolidating, buy side, consolidating, and then bang out? What does that move tell us right there? Right. No wrong answers. Just put it in. I want you to put it in the chat because we've been on here for an hour and 22 minutes. I want to make sure you're not asleep. Balanced price range. Thank you, Rhonda Green. Right. So now we have not met our draw. I didn't include the draw on the screenshot. Right. We did not meet our draw. Now, we still have not met our draw, right? Offer sell side, consolidated, offer buy side, right? Consolidated, and then left. I went too far. No, I didn't. I went too far. Sell side, buy side, consolidated, left, right there, right? And we still haven't met our draw, right? So now, all of this right here, everything, right? When we left right there, right? Everything from this candle right here, that way, right? We don't anticipate price going back to any of this right here because that's a balanced price range now. Balance price range, right? That's a balanced price range now. Where's my mouse? Okay, that's a balanced price range now. So now that this is a balanced price range, right? Now that that's a balanced price range, we are only interested in this is the lowest low, this low, right? Up to that high. Because this is the low of that price move, and this is the high of that price move, right? So now looking at that, right, we've come into the 3 o'clock hour, right? Prior to the 3 o'clock hour, right? We had, get myself together, make sure I'll be doing different things on different screens and all that right there. Okay, so we had this bunch of consolidation right here, right? We had a bunch of consolidation right there. We took off, we left it, right? So now we came up to a high, right? These 1 minute candles now. So, everything's with a grain of salt, but it's still, we came to a high here. We came down and took out a low right there. All right. Right. And then we traded back above. We traded back above that high right there, giving us a breaker right there, right? Giving us an imbalance right there. Cheese and rice, can't see nothing. All right, giving us an imbalance right there. If you zoom in, there's another little imbalance right there. I just noticed that while I was sitting up here looking at that. I just noticed there's another imbalance right there. Right? Another imbalance right there. Right? And then, like I said, this is our breaker right there. So the mean threshold of our breaker lines up with this bottom imbalance, right? The overall breaker, the closure, this is the closure of the breaker right there on the 1 minute, right here. The closure of the breaker right there on the 1 minute. And then, let me share this too. So now that we see everything lined up, right? We have our imbalance. I can move this mean threshold out the way. We don't need it, right? We got our, I don't really need the close of the breaker either, right? But if you look right here, how price came down to the close of the breaker there, then pushed back up. Did you notice that? Price came down to the close of the breaker, pushed back up, and then this imbalance, that much of the imbalance was still left coming into the 3 o'clock hour, right? So now coming into the 3 o'clock hour, we have this right here is equilibrium right there. It's getting on my nerves, so I'm going to move it, right? I mean, if it's not bothering y'all, I'll leave it. But let me do something where I can name it right there. Nah, got stuff there that can be named. so we'll know what the lines are. We'll know what the lines are. Like when it just be lines there and I don't know what they are, it like does something to my it does something to my innards. It does something to my innards. No, that's the high. I'm gonna make it all make sense once I get everything on there. Once I get everything on there, I'm gonna make it all make sense. Speak extemporaneously. So you got to deal with stuff like this right here. All right. Then this one here, I'm just gonna move it because it ain't it's a non-factor right now. Okay. Now that I got everything on there with a name, everything on there with a name. So now we missed this entry here. We missed this entry here during the afternoon kill zone, right? We missed this entry. We had heavy distribution up, right? Heavy distribution up, right? Taking out this high, right? We had heavy distribution up, taking out that high, and we did not get a rejection, right? We came up, took out the high, and started to consolidate right there, right? We did not get a rejection. Once we consolidated there after taking out that high, when we came down, this is heavy distribution. I mean, displacement. This is heavy displacement. And then we took out a high that's not our draw. Our draw is further up there, right? Trust me, it's up there. See, there's the draw. We did not take out our draw, right? Now, once we consolidated here, right? Once we consolidated there, we left that area. Now we deemed all of this over here a balanced price range because we offered sell side, we offered buy side, right? Consolidated there, and then we left this area. So everything from this candle this way, we're not expecting price to go below, right? So we look for the lowest low of this price that took off, right? And go to the highest high, right? The lowest low to the highest high, because here, right? We didn't catch this entry right here, right? We're looking at this entry over here, right? So go to the lowest low to the highest high, right? We come back down into the discount, right? We come back down into the discount to the imbalance that's still left, right? At our breaker, right? It came all the way down to, right? Remember I said I always want to look for how much downside risk I got. Here's the downside risk. We have an imbalance down here. That's the downside risk, right? So I'm accounting for that. The place that price should not get to, right, is below this low right here. Why is that? Because this candle right here is the candle when we left the area, right? We left the area. So the candle prior to it, that way, all of that should be a balanced price range, and price should not come lower than the lowest low of this price leg that left, right? So your stop will be below this low because this is your downside risk. If your stop can't allow to be below that low, your stop would be below the lowest downside risk. So your stop would be below this um BISI right down there, right? Your stop would be below that BISI right there, or below that down close candle right there, that swing low. Right now, I want to point this out. I said I want to share this because I picked this gem up listening to ICT's video that he posted last night. Shout out to people that was in the Discord that was listening to it with me, right? Once we came, now I pointed out in a second. Once we came down into the breaker, into the fair value gap, here's your entry right here, right? If you don't want to take it on this fair value gap and you want to take it on that fair value gap right there, if you notice, you did not get picked up, right? But don't fret. I'm going to share something with you in just a second, right? We came down. This is the entry, and Bob's your uncle. You already know my model, right? Displacement up, which creates a breaker. Right, here's your displacement up right here, created your breaker over here. Here's your imbalance. There's your downside risk imbalance. Here's your entry point right here. The entry point is there on this was here for me. The entry point was here for me because we had come down to the breaker already, right? And we set equal lows. And when price started to pull back again, right, I said, oh, it's coming back for me, right? I said, I'm going to take it off of this imbalance right there, right? And I'm going to give it to below this low down here. So entered on this imbalance right there. See, this imbalance didn't get picked up. Now, let me share with you the gem that I learned from ICT, right? For balanced price, for not balanced price ranges, but for imbalances that have been repriced, right? For imbalances that have been repriced, this is when you know it's a balanced price range, right? I had been saying, right, when we offer, like this is a BISI, I had been saying when we offer the sell side and then leave it, right? I had been saying that this leaving it made it a balanced price range. I learned today from watching ICT's video what makes it a balanced price range is this is a BISI, right? So offering the sell side, right? I had that correct, right? But before leaving, coming down to the low of the BISI and failing to get through and then leaving. This failure to break back below that low, stopping at that low wick for wick, right? Coming to that low, stopping at the high of this candle right over here. This, in this case, it's the 246 candle, right? Stopping at that high of that candle, wick for wick, stopping at that low and then leaving. That's what makes it a balanced price range. So the buy side, it's a BISI, buy side imbalance, sell side inefficiency. Offer the sell side, right? The sell side was offered. Prior to today, I was saying once it came here and left like that, then it was balanced. And you would hear me say, now that it's a balanced price range and price is above it, we anticipate this acting as support, right? That's what you would hear me saying. I would say, hey, we came down and it did its job. It acted as support. I was incorrect on that. It's not a balanced price range until price comes back into it, fails to break the low, stops at it tick for tick, and then leaves. This leaving after the piece that I left out, which is very important, after coming back into it and going all the way down and testing the low and then leaving. That's what makes it a balanced price range, not just offering the sell side and leaving. This 305 candle doesn't make it a balanced price range, even though we offered sell side and left. This 306 candle is what makes it a balanced price range. And now this is for imbalances. This ain't like the whole balanced price range where we offer buy side, sell side, and then left that area. That's different. That's still when we left that area, you know what I'm saying? That's the potential balance price, but we're talking about the imbalances, the gaps, the voids, you know what I'm saying, the fair value gaps. Once we come back and test that low, or come back and test that high if it's a SIBI, and then leave. This is the candle that makes it balanced. Now that I've shared that and beat that horse to death, if you wasn't taking it off of this fair value gap because your risk management don't allow you to put it below this fair value gap here, and you was waiting at this fair value gap to get picked up on institutional order flow entry drill, and it didn't give it to you because it came down and stopped tick for tick with the closure of this 246 candle and never got into the fair value gap. Now that we came here and pulled down to this fair value gap and rejected off of it, making it a balanced price range, you can take a close proximity entry, right? Either at the open of the very next candle, right? Because you want to wait until this candle close to give you confirmation that this is a balanced price range, right? Right. And I'm saying all this because what I did today after I had took my full stop out, right? Because I go in with 5 contracts, right? I took a full stop out. When I came in here, I only took 1 contract long right here, right? I took 1 contract long right here, right? Because I took a full stop out, and I was like, it was a full stop out. I really shouldn't even be taking this trade, but it's just too delicious. I know we're about to run. The way it's setting up, we're about to run. So I took 1 contract here and I said, I'm just going to let it run as high as it can. I'm not even going to, when I put it on, I'm going to take my target off and I'm going to put auto trail on it to trail it. Once it gets so many points into the money, I'm going to just auto trail it 2 points behind. And I'm just going to let it run until it come back down 2 points and stop me out, right? So put on the 1 contract on when it came down into this candle, boom, picked me up, came down, wicked off of that, no harm, no foul, came over here, came down, it's like we closed there, gapped up, open there, came down. When we hit this and rejected off, I waited till this candle got down. I waited till this candle got down to like 5 seconds, right? 5 seconds. It was like 5, 4, counting down. When it got to like 3, 2, I just bought another contract inside this candle right here. It was, you know what I'm saying? The candle was moving around. So it probably was like up here toward the top somewhere. You know what I'm saying? I just bought it because I know this candle is about to close. You can wait for the next. Now, in hindsight, I wish I would have waited for this candle to open because I could have came down and got a better price on my second contract down here, but it would be a close proximity entry because you've got validation right here that this fair value gap is now a balanced price range, and the algorithm is not interested in going any lower. So right as this candle was closing, I put on another contract. So now I got two contracts on, right? After I took a full 5 contract stop out, I got two contracts on now. And when price started to move, right? Price started to go up. Once we got, so far into, I think I got up to like 8 points. Once it got up to 8 points, I started to I didn't have a target. I took my target off, and when it got up to 8 points, I right clicked on my stop loss, set the auto trail property to just trail like 2 points behind, to trail like 2 points behind. And it was like over here in this part of price over here. Once it had got up so far, it was over in this part of price over here. Once we, again, notice, remember this old, when I told y'all I shared this picture in the Discord? Remember when I told y'all I shared this picture right here in the Discord, and I was like, price needs to blast through this, and if it reject, I'm looking short. I never got a chance to get short because it didn't give me an entry that I wanted to get short when it came down here, right? So as we coming back up to this SIBI, right? I still got this SIBI, and I got both SIBIs on my screen, right? Still watching them, right? So as we came up to this SIBI, I'm watching how price reacted here, right? We got up here, we pulled back down, right? We pulled back down. It's some few new week opening gaps and stuff in there, I think. Let me check that. I don't know where's my new week opening gaps. It's farther down. We already blew past the new week opening gap, right? So once we got back to the SIBI here, once we came up here, if you look right here, this candle right here came down and stopped on the top of it, tick for tick, right? This candle dipped in, this candle stopped tick for tick, this candle pushed through, that candle stopped tick for tick, that candle dipped in, this candle stopped tick for tick, and then took off, right? Took off. Once we came back here, this candle never made it there. That candle that gave you your tweezer bottoms, a lot of people who trade candle patterns, tweezer tops and tweezer bottoms are a sign of reversal for a lot of people who trade them, right? And then out. Once we took off right there, that's when I set my auto trail to just follow it 2 points behind. 2 points behind. And we hit this buy side. Notice when we hit this buy side, we just kept going. We just kept going. Why? Because the algorithm, now it's spooling. It's spooling now. Like here, once we came up here and got above all this right here, once we broke this high right there, once we broke that high right there, now the algorithm is spooling, right? It's spooling now. We came down, poked below that, and gone. Took off. That's it. The algorithm, like, I'm not coming back. And then I want to say the last one got stopped out just shy of this weekly volume imbalance and weekly liquidity void. Right up here at the top up here somewhere. Right around, I think it was 42.11 something, because the imbalance started at 42.14.75. I think it got stopped out at 42.11. So with those two contracts, I was able to get back green off of taking a 5 contract full stop out, just off of 2 contracts, and use the trail and stop. So it blew past the draw, got into the weekly what's the name, and I can show you that. I had that on the chart. We talked about that yesterday. I think we talked about that yesterday. Oh yeah, there it is right there. And that's it, man. That's it. That's all I got. Let me go. Might have to go to daily. Right there. Yeah, there it is. Right. If you look up there on the daily, right? Well, let me go to weekly so you can actually see it. Remember when we were last night when I was talking about the upside? I had the volume imbalance and the high of the high of the liquidity void is the high of the volume imbalance, right? So if you look here, I talked about this last night. So the high did from this candle's high, low, the August 15 weekly candle low to the August 22nd weekly candle high, that's the liquidity void. There's no price in there. And then from the August 15th candle low to the August 22nd weekly candle open, that's the liquidity volume imbalance. That's the volume. So you got a volume imbalance and a liquidity void mixed in together, right? So and price got all the way up above the low of the volume imbalance on today. And I had that marked out. I marked that out the other day when the NQ hit us, when ICT was talking about the draw on the NQ was the weekly volume imbalance above price. And then I was like, oh, we got one above price on the ES. Maybe that can be a stretch goal. And that's twice. That's 2 days in a row where it didn't hit the stretch goal when I wasn't expecting it to. I'm sorry, y'all. I said I wasn't gonna be in here long, and it's an hour and 50 minutes, man. Let me drink some water, and while I drink some water, we're gonna let Woody. What that? Let me get about 15 minutes, 30 seconds of a beat. Let me get 30 seconds of a beat, Water. Let me banjo. Let me get like 30 seconds of a beat, Water. This my new style now. Whew. My boy thirsty. I've been talking. Each of my hours, yeah, they get it better. Got speed what I live. Ever since the bed wedding, like give my cayenne. She like the peppers, and bring on my blood. Reading off a new letter. Each of my hours, yeah, they get it better. Got speed what I live. Ever since the bed wedding, like give my cayenne. She like the peppers. I'm gonna go ahead and knock this off. Yeah. Say I'm too sick, but like nobody better. Love how you lanes, but I'm under the weather. Gas me up, hey, get light as a feather. Bodies get less, we're better than cheddar. Yeah, cheddar. I stack pay, baby, I like letter. Let's go right here. All right. Let me see what's up over here. Saw that. Why you not get in the middle when we shift after taking sell side? My entry model is raid on sell stops, breaking market structure up, creating a breaker, retrace back to a fair value gap. Balance, draw. Gems. Aha. Oh, snap. So we can wait for the retrace after the balance price range confirmation candle. Yep. What I did today is I waited for that candle to just about close, and then I just put on another contract because I didn't know, because price was going, and I was like, it may not give me a retrace, so I just bought it there because I'm like, it's not gonna go back below that balanced price range, so I'm just gonna buy it here. Hindsight, once the next candle opened and it dropped down, I'm like, I could have, you know what I'm saying, and I should have put on another contract, but I was like, I'm not gonna be greedy. I said I wasn't gonna do no more than 2 contracts. So But yeah, I did it soon as. But yes, you can. I did it myself today, and I've seen it before. Like I've seen that setup before. I just didn't know why it was doing what it was doing. But now that I learned that yesterday, I was like, that's why that was doing that. When I'm, you know, when you be like, man, that's why that was the whole time. Like, did you know that? Yeah. The review of the AM session explains why I was stopped out on the short. Thanks, Tim. Oh, you welcome, little Hulk. I know why I was stopped out because I just jumped in. Oh, talking about, and then I jumped in full leverage. I jumped in full leverage and got stopped out. If I would have waited and went in full leverage when I was supposed to, imagine what that would have been. Imagine what that would have been. I tell y'all not to do this right here, but I'm finna do it. I tell y'all not to do this right here, but I'm finna do it. Each my albums, they getting better. I be like, don't do this, but I'm finna do it. 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 Executions. I'm finna do it. 314. Is that? Where's? See, what's the name? It'd be like. No, 319. There it is. 319. 319. Okay, so 319 and then 325. So 4193. Okay, so 4193 should have been the proper entry at full leverage. And then at 351, it got stopped out at 42, 30, 25. I mean 42, 13, 25. 42, 13. Sorry, y'all. 42, 13, 25 minus. See that other number was 41. Hold on. Did I say 4193? 41.3. Hold on, 3. Yeah, 4193. That's what it said. Minus 4193. 20.5. 20.25 points. So 20.25 points times. So 20.25 points times 50 times 5. Woo, 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 wee. Woo, 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 wee. Woo, 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 wee. If I would have went in full leverage when I was supposed to. A 20-point run. A 20-point run. But I had to recover from. So 5 times 50 times 5. So I had to recover off of 2 contracts. I had to recover 1250. And then the little leftover, the little piece of green at the end of the day. But if I would have went full leverage when I was supposed to. But and I advise y'all don't do stuff like that because you'll start to beat yourself up. But you know, like my mom and the old folks used to say, "Do as I say, not as I do." Do we got any questions, man? Do we got? Hey, it's all gravy. One contract game. Do you know? Do you know that one contract? Right? Do you know that one contract? Right? So imagine, right? You when you just starting out, I advise everybody just start out on the MES, right? I advise everybody to start out on the MES, right? Right. So um you got 5 points, right? Times $5 per point, right? On one contract, that's $25, right? A lot of people smirk at that. That ain't no money, right? If you do that once a day, right, and you get 4 successful trades a week, right? 4 successful trades a week, right? Just say you let's just say you try 5 trade. You try to trade every day, once a day. You try 5, and you are successful 3 times, right? And you're going for is 1 for 1, right? You risking one to make one, right? So every time you get stopped out, full stop, you losing 5, you shooting for 5, right? So you successful 3 times, right? Right. So you up times 3. You up $75 in a week, right? Now, once you get your skill up and once you get your account up, right, and you move over to the ES, right, just off one contract, right, you're doing the same thing. You ain't changing nothing. Your model the same. You're doing the same, but now everything is times 10. So the same thing, all you got to do is say times 10. Now you're making $750 a week. Then that's just off of 3 successful trades and losing 2. Right. Right. Because you're doing them 1 for 1. You're doing them 1 for 1. Now imagine when you go, you can move up to doing them 2 to 1, right? Imagine now you've increased your skill, and now you can hit 10 points, but you're only risking 5, right? You're only risking 5, right? So you got 10 times 50, right? So that's 500, right? On your win. So it's like you got 10 times 50, right? So now you're, you know what I'm saying? You're up. Now it ain't it, now like you go in but before if you make 250 one time and then you lose one, right? Now you start back over, right? So let's do the math. Make sure I'm telling you right. 250, you up. You lose one. That's 250. Right? You back up. Right? That's 3 trades. Right? You lose one. So that's 1, 2, 1, 2, 1 trade, you up, lose 1, 250, you up, lose 1 trade, minus 250. So, all right, so you up 250. There you go. So 250 minus, so 250, got it. That's 1 trade. Then you lose 1, that puts you back at 0. All right, that's 2 trades. Third trade, go up 250. Fourth trade, you lose 1, put you back at 0. Fifth trade, okay, so you up 250. All right, so you up 250. All right, you up 250. All right, but now when you do it 2-1, right, first trade, you win 500. Right, and it's just only 3 successful. You trade once a day, every day, and you're only making 3 successful trades, and you only going for this amount. So that's 5. Then you lose 1, minus 250. It's 2 trades. Win the next one, 5. Right, 3. Lose 1, 250. Win the next trade, 5. You up 1,000. You up 1,000 at the end of the week when you learn how to hit 2-1. But you ain't doing nothing no different than when you was on the small one, you know what I'm saying? But it can, one contract game can be lucrative too. Sounds like me with the SPX. It's not. You're welcome. I'm going to watch, rewatch. Been busy with family today. Family first. Family first. Hey man, that's it, man. I done held y'all way too long. I don't see no questions in there. We've been on here 2 hours. I didn't plan to stay this long. My dinner is ice cold. Let me close out this stuff. Oh, that's a picture. I need that over there. Hey man, don't put off till tomorrow what you can say today. I feel bad. My daughter called me on her break. I told her to call me back on her next. She said she'll call me back on her next break. But let your loved ones know that you love them right now. Right now, today. Take advantage of the day. Don't put off till tomorrow what you can say today. Don't just say it. Don't just show it. Say it, show it, and confirm it. Because ain't nobody promised tomorrow. We're going to keep it short and sweet. That's it, man. Let your loved ones know that you love them today. And yes, y'all did see me more on vacation than y'all do any other time. But that's because what that R&B singer name is, August Alsina. I love this because I love this. And that's August Alsina that made that song. Because I love this, man. And I love y'all. And in the words of a very, very, very wise man by the name of Russell Simmons, I would like to say, God bless. Good night. I'm gone.